Hello out there, my Facebook friends, clients, and the like. I'm Jonathan Bengal here. I'm doing an impromptu video this morning or this afternoon or whatever the hell we're watching this, and that is I keep getting asked this question about distributions, draws, and wages. Another fancy word we can actually attach this to is a bigger word, which is called B for benefits. Now, or sorry, C for compensation. So here's the dealio, Milio. People oftentimes get confused by these three words: draws, distributions, and wages. And oftentimes, business owners confuse these words. By the way, I just totally forgot because this is so impromptu. I forgot my whole entire introduction. I'm Jonathan Bengal, the host of the Naked Tax Talk, where we bear down naked to the truth about our tax lives. And we do that by talking about our personal selves, our business selves, and of course, our money. And people always ask, why do I show up naked? It's because how I cultivate courage is by just being here open and naked with you guys and having this conversation. And today's conversation is about the misconception about draws, distributions, and wages. Now, I guess I could be hosting a webinar and I could be hosting something else where people could be paying me for this. Quite honestly, if you feel like you would like to leave a donation, private message me and let me know. And I'm sure we can arrange that because I'll take payment. But here's the thing. These three topics, wages, distributions, and draws, is a serious deal because each of them has their own unique tax consequences behind them. Not only that, though, but how they're reported to the government is also unique and different. Whether or not they're taxable is also unique and different. And it all boils down to, again, the right entity that we're in. You know, if we're a sole proprietor, some of these words make no sense and some of them do. If we're an S corporation or a C corporation, these words make sense. Some of them don't. So here's something else that I also want to let you know before I get going on this. And that is that this is an interactive adventure. So quite honestly, if you are an entrepreneur or not, and you've got some questions as it relates to today's topic, please feel free to leave a comment and I will get back to you and answer your questions. Okay, so I have just spent almost 3 minutes just not even through my introduction. So here we go. Are you ready? Let's talk about the word draw. Now, draw means in the world of accounting, the world of business, it means something that we are physically taking away from our business. So what I mean by this is that when every person starts a new business, what they do is they put money into their business to get it started. This is a classic, if we distill it down to its most basic format, when someone wakes up and says, I'm going to go start business for myself, ideally the way it works is I go to the bank account, to the bank where I bank, and I open up a second checking account, typically in the name of my business or DBA or something. And here's the thing. Up to this point, have you sold a widget? Have you sold a service? Have you done this? And my answer is going to be no, because most people don't get a client the moment they wake up and decide to start a business. So instead, they take something from their own personal selves, and we call this word contribute, or another word is to give. And we give this to the business so that it can get started. It's kind of like children. Children are just not born out of nowhere. There's no miraculous births other than the one that Christians say there are. But as far as other births are concerned, it takes two people typically, right? It takes an X chromosome, a Y chromosome, or two X chromosomes to produce a child, right? Sperm and an ovum. That's what it takes to create a baby, right? In the world of business, it's the only time that we get to be, I think it's called asexual, meaning I can wake up and start a business, AKA the extension of who I am. That's now my child. I just give birth to a new kid. And that new kid needs to survive the moment it's born. The moment it pops out, you got to feed it, clothe it, take care of it, give it nothing but love, right? This is the truth. So as business owners, when we give birth to our first child, okay, we are going to feed it ourselves, just like a mother does with breast milk. We're going to feed our child. And so in the first instance, the time they eat, or the first time, they're going to consume something called money. All right? Money, M-O-N-E-Y, money. And so you're going to take the money from your personal self and you're going to give it to your business. You're going to take the money and you're going to give it to your business. Why? So that your business can use the money to go out there and buy the domain names, buy the advertising, buy the back office shit that you're going to need to start a business, hire the accountants, the lawyers, you name it, right? Your business is going to need all of this, we call cash, coming into the business, but not from sales right away. It's impossible. So you're going to contribute the money to the business. And it's going to come in the most basic of forms, which is typically money. You're going to go to the bank and they're going to ask you, please open up this checking account, but you need like 25 bucks. So you reach into your wallet and you take out 25 bucks and you give it to the bank. Okay. So another way to look at this, which I realize I don't have any props to use. I guess now that I'm thinking about it, I should. But it's equivalent to basically taking this little doohickey. I don't know what this is. It's a cap to something. And this pretend this is $1, right? Or better yet, pretend it's $100, this little thing. And I'm going to give it away from this hand, which represents my individual self. And I'm going to contribute it to my business, which is this hand over here. Because that's kind of what it's like, isn't it? Give me money. Give me money. So I'm going to contribute this money. Clunk. You see, it transfers into another hand, my business. That is called a contribution. I take it from here, my personal self, and I give it to my business. We call that a contribution. So now here's the thing, right? Why should we track this? Well, it boils down to this. Uncle Sam is worried and curious about your income. He wants to know how much money you're banging out. How much money are you making selling your products or your services? And what are you offsetting that to arrive at what we call taxable income? That's what he wants to know. But he's also a smart man, because you have to ask yourself this question. Does he really believe that the first $100 you put into your checking account was because you sold something? In the very rare circumstances is that true. But more often than not, it's you giving your own company money from the very beginning. Now, we can complicate this and go even further and say that you can contribute things like machinery, equipment, furniture, fixtures. You can even contribute buildings. You can even contribute vehicles. The point is, you can take something that is personally yours and give it to your company for your company's benefit. And we call this a contribution. So why is that important before we call it the draw or the distribution? It boils down to taxes, T-A-X-E-S, taxes. Why? Because when I contribute the money and I take it out, Uncle Sam's going to be made aware that that was the money I put in, the value of the assets I put into my business. And so when I take the money out of my business that I put in, and it's not a loan, okay, I put it in, I'm going to pay no taxes on it. Limitations do apply. I pay zero taxes on the money I take out of what I contributed to my company. We call this a draw if you are a sole proprietor, you're a single member LLC. This is the word we use, draw. We call it a member's draw. If you are a shareholder, like a C Corp or an S Corp, we call this a distribution. But the word draw and distribution means the same thing in accounting terms. It's just the entity determines the verbiage. So again, if I'm a sole proprietor or a single member LLC member, I am taking out draws. If I'm a shareholder, I'm taking it out as a shareholder distribution. I can get really complex and say if I'm a partner in a partnership, I can have partnership draws or partnership distributions. But you see how the two words are being used at the same time? Draws, distributions is essentially the same word. Again, because Uncle Sam realizes that the money I put into my business and then take it out is not a taxable event. Limitations do apply. That's the reality of why distributions or draws are, one, tax-free. because you put the money in and you took the money out. It's called a distribution. The second thing is it's non-taxable. Limitations do apply. They're non-taxable for the most part. Now, what gets confused is the third word. And the word is W for wages. Business owners get confused by the term wages because wages, believe it or not, is an actual expense to doing business. And a result of having wages, which is technically an expense to my business, I am allowed to take it as a deduction on my tax return on the business side of it. But here's the catch. When you are a Schedule C filer, a sole proprietor, a single member LLC, or in some cases, a general partner or partnership, wages are prohibited in the sense that I am paying myself as an employee. If you are a sole proprietor or a single member LLC, or even a partner in a partnership, to pay yourself wages is illegal. To deduct those wages that you attempted to pay yourself is illegal to deduct. Not the same if I hire my friend to work for me, not the same if I hire someone full-time to work for me, my director. Their wages, yes, I can deduct all day long. It's a taxable event, right? To them and to me, meaning I get to reduce my taxes. But to pay myself wages as a sole proprietor or as a single member LLC filing on a Schedule C, technical terms here, paying yourself wages is a no. Ain't gonna happen. So the question then becomes, well, how do I get the money out of my account? And we call this your draw. We call this what you originally funded your business with. And if it so happens that your business produces a profit, you're going to pay net income tax, FICA tax on your net profit. You're going to pay that to Uncle Sam. And the residual is what, in theory, you're going to be able to put back in your pocket and take it home with you. Okay? Now, if you are a C corporation or an S corporation, and you are an employee of your own business, now this is when the word wage comes into play now, the word wages. So now with the word wages, as an S Corp or a C Corp paying its shareholder to manage this business, which, by the way, if you are the only person working for your S Corp or your C Corp, you have something called required minimum compensation. So now the wage amount becomes determinable by some studies that we do, believe it or not, to work with you guys to find out what that specific number needs to be. Now the wage becomes, believe it or not, an expense to your S corporation or your C corporation, and you as an individual will pick it up, known as W-2 wages. Wages are a taxable event, meaning they reduce your total taxable income from a business side, and they can increase and do increase your individual income at the individual level. You get your own private W-2 from your own C corporation or your own S corporation, and we call that wages. Again, the plus side is that my C or my S corporation can deduct it as a legitimate expense, thereby reducing my corporate income. I'm still going to pick up the difference, though, on my personal tax return as my wages, subjected to ordinary income tax. You see, wages is not a distribution. It is not a draw. You see, many of us are thinking we're boning the same person, but we're not. They're three different events. The only person that's kind of coming in as someone the same is the word draw and distributions. They mean the same, just depending on the circumstances. Otherwise, the word wages is not distributions, and it's not draws. So now, of course, what happens when you pay yourself a wage, a W-A-G-E, a wage, you are required now to report that to the government. Uncle Sam wants to know who's on your payroll. So you let him know I'm paying myself as an employee because I'm a shareholder of an S corporation or a C corporation. I have employees that work for me. I'm reporting their wages and their taxes to you too. That's how he gets told, he gets notified. And here's something interesting about payroll in our businesses. In America, we are what you call a pay-as-you-go system, meaning that as I incur the tax liability, I have two choices to make. Ideally, I can hold on to the tax myself, or I can prematurely send it to the government as an estimated tax payment. By doing that, I am actually becoming the trustee of my employees' taxes I withheld on them. You see, here's the truth. When you're self-employed as a sole proprietor or as a single member LLC and you do not have wages, you have something called net income, net profit. Anything over $400 is going to be slapped with a mandatory 15.3% tax. So what that means is that you should be taking 15.3% at a minimum out of every dollar that you earn and set it aside for your future upcoming tax bill. When you are in business for yourself still, but you're an S or a C corporation and you have wages, not only for yourself, but maybe for your employees, you become the trustee of their money. Did you know that as an employer, you become a trustee of somebody else's life, their tax life? Yes, the moment that you withhold the required withholdings by law, which is Social Security, Medicare, and yes, Eric, I'm aware of the fact that I don't have clothes on, and Social Security, Medicare, and ordinary income tax, both federally and state, you now become the trustee of that event. You have an obligation to take the money that you take out of someone's paycheck and remit it. You give it over to the government. You have an obligation to do that. Even if you are the own employee of your own S corporation or C corporation, you still have to remit the tax. If you do not, then you end up in trouble. This is when you get audited. This is when you have agents knocking at your door. This is when you get the letters demanding you pay back taxes, penalty, and interest. It is because you have violated being the trustee of your employees. And this government says you are responsible for the withholding and transmitting that money to us. So we have to submit it. That's why we use payroll companies. That's why we use third-party payroll administrators who caught on a long time ago that, honey, let's be real here. We as lazy as a mofo. We don't want to be sitting here tracking our own damn payroll. Let's be real. So payroll companies they were created. And they said, we'll tell you what. We'll take on the liability. We'll take the money out of your account. Don't get us wrong. We're going to take the money out first. And then we'll submit that to the government when the time is due. And in the meantime, we're going to go make money on your deposits. Duh. So, of course, we go, yes, for the price of convenience, hell to the double, yeah. I will pay you to manage my payroll, and I will let you also manage your own payroll. I mean, we'll let you still manage your life. Yes, Eric, I thought maybe you forgot. No, not at all. It's my show, Naked Tax Talk. Hello, this is my show here. So, needless to say, this is the reality, right? So back to recap, distributions, draws are typically non-taxable events. Limitations do apply. They belong on a statement called your balance sheet. They will never show up on your profit and loss statement unless the bookkeeper or the accountant's doing it wrong. Otherwise, you will never see it over there. Then on the profit and loss statement, which some of us, let's be real, don't even know how to read, and that's okay. Because believe it or not, I'm actually working on a program that I'm going to teach you guys how to read your own financials in a guilt-free zone, right? So it shows up on a schedule called your profit and loss statement. This is where we're going to see wages. But remember, if you're a sole proprietor or you're a single member LLC filing a Schedule C on a 1040, paying yourself wages is a no-no. In fact, it's against the law. But if you are an S or a C Corp shareholder working primarily in your own business, you are required to have something called required minimum compensation, which means you're going to end up with something called wages. So, in closing, if you would like to learn more about how wages and distributions and draws can impact your tax life, believe it or not, for the better, I want you guys to meet my chat box. I want you to take my tax personality quiz because that's the first start to figuring out who we are as taxpayers. Because that's the honest truth. We can pretend to know it all. We can pretend to hide ourselves inside our own fluffy bathrobes and never worry about it, but do worry about it. We can hire experts like ourselves to take care of it and manage it for us. Or quite honestly, maybe we just want to get on and we just want more. So here's what I'm gonna tell you guys. Come find out how these three things, wages, draws, and distributions, has an impact in your business for the positive mainly, and of course those tricky bad things that can pop up. So text "let's get naked" right now. Text the word "let's get naked," all one word, "let's get naked" to 555-888. Here's another thing people ask me. Is it true you show up naked? Babies, I'm only showing up naked if you want me to. Otherwise, I do have a dress shirt. I do have polo shirts. And if you want to hire me because the way how I look, that's cool too. But I'm just sharing with you guys that the honest truth is that you must know these differences between draws, distributions, and wages. The two, draws and distributions, are tax-free. Wages are not. They both have a benefit to you and has an impact to you as well. So there you have it. That's my story on the differences between draws, wages, and distributions. If you'd like to know more about how this plays into your life, shoot me a text. Let's get naked. Send it to 555-888. There, you're going to meet SensorBot, who is my virtual employee, who's going to invite you through a virtual spa. You're going to check in, and you're going to discover what's your personality type as it relates to the topic of draws, wages, and distributions. Because here's why. Maybe you're going to show up naked, like me. If you show up naked as your tax type personality, what that tells me is that this whole entire payroll thing is already being handled by somebody else. You've already placed your trust in somebody else to do all the work. Or maybe you are somebody who will show up as what we call your bring your own bathrobe. And that's somebody who ultimately, as it relates to my draws, distributions, and wages, are on the fence about hiring a third-party administrator to help them with their payroll. They are still kind of going, well, I think I can do some of this by myself. Do the numbers make sense? And how much should I be paying myself? That's the question that my bring your own robes are talking about. Or maybe you are what I call my fluffy bathrobe. And that person, as it relates to my draws, distributions, and wages, deals with this question this way. How much am I paying people? I don't even know. And it's making me sweat just thinking about having to calculate that. What are you talking about, JB, right now? Draws, wages, distributions. I just want to take money out of my account. I don't know what's supposed to mean, right? But we're also afraid to talk about it. That's okay. And then you might show up as the fourth type, which is my bring your own, it's a utility bathrobe. This person is going, are you sure I really need wages? Where in the law does it say I need to pay myself wages? Are you sure that distributions are not the same as wages? Where can you show that to me? That could be your personality type too. And guess what? All four types I work with. Because here's the reality, people. We don't learn the same way. We all have different ways in which we learn. I have a master's degree in secondary education. I understand how people learn. And if I only taught you one way, what service could I be? So instead, I know there's four types of people. There's four types of way in which you guys engage with your taxes. Let's get naked to 555-888. Last but not least, my book is coming out. The ABCs of Deductions is officially launching July 7th. So I'm looking for people to join that as well and to buy my book when it comes out July 7th. I believe it's 11 a.m. Eastern Time, 9 a.m. Pacific, I believe. Or if you want to get a head start, you can send a different text message to under the cover, all one word, to 555-888. Get on my sales team. My launch team. All I'm asking is you buy the book for 99 cents, read it, and leave me a review. That's all I want. So once again, you want to know how dividends, wages, and distributions can impact you on a financial level, and you'd like to know more, let's get on a call. Let's get naked to 555 888. All right, guys. Until then, have a great and fantastic day.